Have you ever drawn a trend line, feeling super confident, only to see price completely ignore it and destroy your trade? Yeah, we've all had that heartache. But what if I told you there's one trendline strategy that actually works every single time, and it's simpler and much more profitable than you think? By the end of this video, you'll know exactly how to draw and trade trend lines effectively, turning confusion into consistent profits. We'll start with clear visualizations, no complicated jargon here, then drive straight into real chart examples. Ready? Let's get going. Seriously, who knew simple lines could print you money? Trend lines seem basic enough, yet most traders get them completely wrong. One trader connects wicks, another connects bodies, and nobody agrees. What's the right way? Stick around, because I'm about to clear up all the confusion. Let's break it down simply. A trend line is just a straight line you draw on your chart to show where the market's really headed. If you connect the swing lows, you'll see the overall direction during an uptrend, those classic higher highs and higher lows you've heard about. If you connect the swing highs, you're tracking a downtrend, lower highs and lower lows. Textbook stuff, but why even bother with trend lines? Isn't the direction obvious if you just stare at the chart long enough? Sure, eyeball it. If you're okay throwing darts at a board completely blindfolded. Trend lines are invaluable for two reasons: identifying clear trade setups for potential bounces and recognizing shifts in market momentum through breakouts. Now, onto the classic debate. Should you use wicks or candle bodies? The simple answer: use whatever gives you the most points of contact. The key takeaways are: more touch points make the trend line more reliable. Trend lines are zones, not pinpoint accuracy lines. Relax, you don't need microscopic precision. Just aim for maximum touches. Let's break it down step by step so you can actually put this into action. First, fire up TradingView. That's my go-to charting platform. And honestly, if you're not using it yet, what are you doing? Start by drawing your trend line, but don't just wing it. Make sure you connect at least 2 or 3 solid swing points. The more touches, the better. Once you've got that trend line locked in, sit back and be patient. Don't chase the price. Wait for it to come back and test your line. Now, here's where a lot of traders get ahead of themselves, but not you. Pull up your RSI indicator. You want to see RSI dip into oversold territory if you're looking to go long, or into overbought if you're planning a short. But don't jump in at the first sign. Wait for it to actually reverse direction. That's your cue. And pro tip, always place your stop loss just below for longs or above for shorts, the recent swing point. Don't forget to shoot for at least a 2-to-1 reward to risk ratio. Simple, clean, effective. And honestly, it's one of the easiest ways to trade with confidence. Some people might say that trading trend lines might feel like cheating, but hey, profits are profits. Alright, let's talk breakouts for a second, because nothing gets traders more hyped or more confused. The reality? Breakouts can be game changers, but only if you approach them with a clear plan. Start by watching for signs that the current trend is losing steam. Think lower highs if price has been climbing, or higher lows if it's been dropping. That's usually your first clue something big might be coming. Then, don't rush it. Wait for a strong, no doubt about it, breakout candle to push through your trend line. No guessing, no wishful thinking. Let the market show its hand. When you get that clear break, that's your signal. Enter in the direction of the breakout. Manage your risk smartly, and always aim for at least a 2-to-1 reward to risk ratio. That way, even if you don't win them all, you're still stacking the odds in your favor. Alright, let's put that plan into action with a real-world example for a short setup. Imagine you're watching an established uptrend that's starting to look a little tired. Instead of new higher highs, you start noticing the highs are getting lower. Classic sign that the buyers are running out of steam. That's your cue to get ready. Over time, we observe that the bullish momentum begins to fade as each new high forms lower than the last. This pattern of lower highs signals weakening buying pressure. Eventually, price breaks decisively below the trend line with a strong bearish candle. This is our confirmation. At that point, we enter a short trade, placing our stop loss just above the breakout candle to protect against a potential fake out. For the take profit, we target a level that provides at least a 2-to-1 reward to risk ratio, ensuring solid risk management and profit potential. This method consistently provides low risk, high reward opportunities. Breakouts are so great, it's like finding free cash under your couch cushions. Okay, Jokes aside, let's see how you can actually use this in your strategy. If you really want to squeeze the most out of your setups, combining trend lines with horizontal support and resistance is the way to go. First, make sure your trend line is super clear. Next, look for any major horizontal levels nearby, support or resistance, doesn't matter, as long as they're obvious. Now, be patient and watch for price to tap both the trend line and the horizontal level at the same time. That's called confluence, and basically, that's the market saying, hey, pay attention. For extra confirmation, double check with your favorite candlestick patterns or a trusty indicator like RSI, because 2 signals are better than 1, unless you're dating. Seriously, nailing these confluence setups can level up your win rate in a big way. So backtest them, make them your own, and thank yourself later. But hey, if you're hungry for more, here are a few extra pro tips I wish someone had dropped on me when I started. First, check multiple time frames. A trend line that looks perfect on the 5-minute chart might be invisible noise on the daily. Always zoom out and see if your lines actually matter in the bigger picture. Trust me, a trend line respected on multiple time frames, that's trading gold. Next, don't be afraid to adjust. Price action changes, markets evolve, and sometimes your original trend line starts looking like modern art. It's totally fine to nudge your line a little bit as new highs or lows start to appear. Flexibility here is not only allowed, it's required. Okay, and finally, watch for the retest. So price finally breaks through your trend line, don't chase it. More often than not, it'll come back for a retest before making the real move. That retest can be your low risk, high reward entry. It's almost like the market's way of giving you a second chance. It's a rare thing, so take it. Adjusting your trend line isn't cheating, it's just being flexible, kind of like your weekend plans. And speaking of being flexible, let's take a look at a classic retest example in action. Say you just spotted a strong breakout through your trend line. Nice, but don't jump in head first. Instead, stay patient and watch as price pulls back to retest that breakout zone. This is where most traders either panic or get bored, but not you. While price is retesting, check your stochastic. If it's confirming oversold conditions, you've got extra green lights. That's your moment. Take the entry on the retest, set a tight stop loss just below the zone, and aim for at least a 2-to-1 reward, you remember. And just like that, you've turned a typical breakout into a high probability, low risk trade. If you really want to level up your trendline game, here's what separates the pros from the amateurs. Make it a habit to spot and draw trend lines every single week. Don't just wait for the perfect chart. The more you practice, the quicker you'll see the patterns before everyone else. Don't just stop at marking up charts though. Use your trading journal to track your entries and exits and actually look back at what worked. That's how you turn small tweaks into serious gains. Journaling your trades might sound boring, but hey, Netflix doesn't help you find better entries. And last but not least, respect your risk every single time. Never bet more than you're cool with losing. That way, you're always in the game for the next opportunity, instead of rage quitting after just one bad day. Okay, time to sum everything up. Look, trading successfully with trend lines isn't about chasing complicated strategies or hunting for secret formulas. It's all about keeping things clear, being consistent, and having the patience to actually follow your own plan. Master these simple ideas and you'll already be way ahead of the crowd. And remember, trading isn't about being right all the time. It's about stacking the odds in your favor, one setup at a time. Probabilities, not predictions. That's what keeps you in the game. If this guide helped clear up some of the trendline mystery for you, don't forget to smash that like button, hit subscribe, and drop a comment below about your biggest trading struggle. Let's tackle it together. As always, keep your charts clean, your strategy tight, and your profits steady. Catch you in the next one.